So very good evening, friends. Good evening to all of you. Friends, we'll start now this particular session. And again, for the purpose of the announcement, this is a free practice batch for all the CA and CMA students, final year students who have got their attempt due in November. And students, one important particular point is that those who want to take the benefit of this free practice batch of IDT, just in description box, students, you will find the number happens to mine. You can, I'll just put you in which you will find the link of the lecture as well as the PDF note. Tulsi, Aishwarya, Abhin, Jyoti, very good evening to all of you. So students, there were a lot of messages which I have got it, and the students have said that just to do these homework questions also once because of the fact, and they would have realized the fact that this is a very important topic, and obviously, maybe the gap of what you have learned earlier and what you are doing it now, many of the students probably would be aware of it. So, since I've given these questions for homework students, I will say that I'll just do those questions with all of you again so that the things are sorted out so far that this topic is concerned, because this is a sure shot question which is going to be appearing in this context. But that is it. This will be the last session on this particular part of the composition which I'm discussing with all of you. So, just quickly wrapping up this one, students, the questions which was being given to all of you on the composition particular part in this case. So students, one was question which was 5D in this case. Let's first take question number 5D. This particular part. Question which is 5D. Now, in the context of question number 5D, students, see what is a question that has been targeted. Once examine whether the supplier are eligible for composition levy under section 10 in the following independent cases in the beginning of the financial year 22-23. That is to say, the eligibility condition is what is tested. Now, if you see over here, IDT Services Limited, registered in Uttarakhand, is exclusively providing intrastate hairstyling services. It has turnover of 34 lakhs in the financial year 21-22. Will your answer be different if Dipti Services Limited also start intrastate supply of beauty product along with the providing the hairstyling services in the financial year 22-23? This was already being discussed with all of you students, and accordingly, if you see so far the eligibility is concerned, as far as this particular part is there, so Dipti Services Limited, I'm just using the abbreviation. And what is the business, students, in this case? The business in the current financial year, which is your 22-23, happens to be the hairstyling, hairstyle service plus sale of beauty products. Sale of beauty products, students. Now, if you see over here in this context, the composition scheme that we are going to test in this regard would be under section 10(2)(a), under section 10(2)(a) of the CGST Act. 10(2)(a) of the CGST Act, students. Now, if you see the eligibility condition, eligibility, the condition, and the remark. In this case, see, please understand there are two questions which are dealt. One is that is only engaged in doing the hairstyling service, and the second part of the question, students, is that she is also involved in the selling of the byproducts, which is the hair products. So if that is the case, when I talk about the eligibility, family in this case, so the aggregate turnover linked with previous financial year 21-22. Now, what is the condition, students, in this context? If you see over here, the aggregate turnover should not exceed more than rupees 50 lakhs. Now be careful. Where is she located? Is she located in that northeast area or the Uttarakhand? Uttarakhand student. Now that doesn't matter at all. Where she is located has got no relevance in this context because 50 lakhs is for all the particular location students. 50 lakh students is for all the locations. So it doesn't matter where she is located in this context. So therefore aggregate turnover should be up to rupees 50 lakhs. That is it. So this is about what? The services. So therefore in that context, the hairstyle service plus what? Plus the supply of goods. Everything to be considered. Now, as far as the remark is concerned, students, when you write about the remark, the two particular points that you have to write in the remark side. What are the two particular points, students, that you will write in the remark side? Point number one would be that since the aggregate turnover of PF5, previous financial year 21-22, does not exceed rupees 50 lakhs, 50 lakhs. In the bracket, you can write that is rupees 34 lakhs. Therefore what? For Dipti Service Limited is eligible for composition scheme under section 10(2)(a) for the financial year 22-23. Okay. Now come to the second particular part of the question. If a supplier of service also engages in sale of incidental sale of product in furtherance of its existing business, then underline the word existing business, then the eligibility condition would continue to be tested under section 10(2)(a). I assure you this will not be coming under the trader category. This was something which I have already told while we were discussing this particular question, that this particular point of selling the byproduct primarily, or the selling of, I gave that example also, a saloon is selling the beauty product. I told you the example also about the coaching classes. Students are taking the lecture, but there are students who are only taking the books. So for books, shall we go to 10(1) and 10(2), and for other things shall we go to 10(2)(a)? Is part here and part there possible? Answer is no. Whether in the scheme, whether you are either completely under what? Under 10(1), 10(2), or you are completely under 10(2)(a). You cannot have half thing here and half thing there. So this is something which I have already explained earlier as well, that this things is not possible, and therefore you need to check out the nature of the supply, and therefore in the course of its hairstyling business, the products are being sold. So therefore the conditions of 10(2)(a), the eligibility conditions of 10(2)(a) only has to be considered, and not 10(1) and 10(2) in this case. And therefore in this context, so if this case, then the eligible condition will continue to be tested in 10(2)(a). Therefore the yes, it will be based on the principal supply. Therefore the supply of hairstyle service along with goods in the bracket beauty product shall be eligible for composition scheme up to the aggregate turnover of rupees 50 lakhs in the current financial year 22-23. In the current financial year 22-23. Now there is no limit for it, so therefore up to the aggregate. So both combined supply of service, hairstyle service along with goods shall be eligible for composition scheme up to the aggregate turnover of rupees 50 lakhs in the current financial year 22-23. In this context. Okay, so that is what it is. Rate Tulsi need not be written because this question is not has nothing to do with. Okay, tell me in this case if supposingly they would have asked for the tax liability also in this question. So for the supply of product, will you apply 1% or will you apply 6%? For the supply of the product, the beauty product in this case, will you apply 1% or will you apply 6%? It has to be 6% because you are testing the condition under section 10(2)(a). You are testing the condition, students, under section 10(2)(a). I hope that all of you are clear with this one now. Now coming to the other particular question on the homework part, I'll come to question number 15, which also has got, I will come to question number 15, I suppose, which also has got multiple case study of such nature. Come to this question. Question number 17. 18. Question number 18. Examine whether the suppliers are eligible for composition scheme in the following independent cases. Is there any other option available for concessional tax payment with any of these suppliers? Wherever the composition scheme cannot be availed. So examine whether the suppliers are eligible for composition scheme in the following independent case, students. Is there any other option available for concessional tax payment with any of these suppliers where composition scheme cannot be availed? Now, Mrs. Devlok, a registered dealer, is dealing in intrastate trading of electronic appliances in Jaipur. It has turnover of rupees 130 lakhs in the preceding financial year. In the current financial year, it has also started providing repairing services of electronic appliances. So what I'm going to write, students, this would be a marginal service. Now, this kind of a question, students, we are only going to discuss. Okay, format already is now, team format is there. So I need not prepare the format in this context, but I'll discuss here in quickly. This is the marginal service. So in the current year, they are providing the marginal services. So here you will make a format of eligibility under 10(1) and 10(2), under section 10(1) and 10(2), and be careful, he's a trader. So therefore, in that context, the last year aggregate turnover, the first statement would be the aggregate turnover in the preceding financial year should be up to rupees 150 lakhs. So that is what you are going to check, isn't it? And then in the same eligibility point number 2, you are going to write about marginal services. And for marginal service, put up the threshold, 10% of the turnover of the state, which will be compared with rupees 5 lakhs, whichever is higher. And on that basis, you will make your conclusion. Okay, so that is the eligibility is there. Yes, the eligibility is there. We will be eligible for 10(1) and 10(2). Let's look upon the next one, point number B. Mrs. Narayan and Sons, a registered dealer, is running a Khana Khazana restaurant near city in Jaipur. It has turnover of rupees 140 lakhs in the preceding financial year. In current financial year, it has also started dealing in intrastate trading of beverages in what? In Jaipur. Now you tell me, students, be careful over here. Now in this context, 140 lakh, this is a restaurant service. So restaurant service, plus he is doing a trading. So restaurant service plus he is doing a trading. Now you tell me one thing. Is this both covered in 10(1) and 10(2)? 10(1) and 10(2)? Are they both covered in 10(1) and 10(2), students? Restaurant service as well as trading in goods. Are they both covered in 10(1) and 10(2)? And the answer is yes. So the eligibility would be decided in 10(1) and 10(2). The eligibility would be decided in 10(1) and 10(2). And in that particular case, what are you going to say? Students, the aggregate turnover of the preceding financial year should not be more than rupees 150 lakhs. And because the aggregate turnover is only up to 140 lakhs, therefore in the current financial year, which is 22-23, Narayan and Sons will be eligible for the composition scheme under 10(1) and 10(2). Now, if supposingly students in the current year they would have given you the question, that the turnover restaurant service, just hypothetical, restaurant service is 120 lakhs, trading in goods is say 20 lakhs in the current year. This is the current year data. How you would have calculated a liability in this context? How you would have calculated the liability, students, in this case? If in the same question they would have told you to compute the liability also, wherein for restaurant service they are telling you it is 120 lakhs in the current financial year, and for the trading in that juices, which is the goods, will be what, 20 lakhs. So therefore, what would be the liability in this case? Quickly, students, you should be aware, you should be in a position to tell me the answer. We have discussed this kind of question earlier also. You'll see. Quickly, students, 10 seconds more. Quickly, students. What is the liability? What is the scenario? Please say about the liability part. Avi. And indeed, that is the case, students. Students, here it would be 5% for this and 1% for this. 5% for this and 1% for this. Now, somebody will say, but sir, in that earlier question of beauty parlor of Gita, where you have taken for the entire service plus the trading of goods, service plus the trading of goods under 10(2)(a), and the rate applied was 6%. And the rate applied was 6%. And here you are doing a split up, 5% of 120 lakhs, 1% of 20 lakhs. Why? I can do it. Why? Because in scheme number 1, there are 3 categories. And if there are 3 categories, then definitely in that situation, I am allowed to, if there are turnover which falls in more than one category in scheme number 1, so that portion of turnover will be subject to composition tax under that respective category. But for Geeta and Sons, because it is 10(2)(a) for her, in that previous question number 5D, because it is 10(2)(a) for her, therefore the entire turnover will be under 10(2)(a) and the rate would be at 6% for the entire turnover. Is that point clear to all of you? So be careful on this particular observation in this regard, and therefore don't make the mistake in the examination. And I have told you earlier, and I'm repeating this point again, when it comes to presenting your answer, please show 2.5 CGST, 2.5 SGST, 0.5 and 0.5. However, in this question, they are not asking you to calculate the tax liability. They are only talking about the eligibility. But I just explained you further because I knew that this is where you will go wrong if the question is about calculating the tax. Coming to point number C over here now. Messrs. Indra and Bro A registered dealer is providing restaurant service in Uttarakhand. It has turnover of 70 lakhs in the preceding financial year. It has providing intra-state interior designing service in the current financial year and discontinued rendering restaurant service. Same question we did in that question number 5. Same question we already solved in question number 5 yesterday. Now you tell me quickly that in the current financial year, am I going to check the turnover of the preceding financial year should not be more than 75 lakhs or it should not be more than 50 lakhs? What I should be doing it? Students, this thing in this context. Kavita, okay, I'll answer that particular query. So Kavita is asking in the previous question that if the sir bifurcation would not be there, then what I am going to do? So what she is asking, Kavita is asking that in the previous question that I have done the bifurcation 20 and 20, assuming they are giving you data. But what if that the bifurcation is not given? Technically, they have to give the bifurcation. Students, technically, they will have to give the bifurcation. Otherwise, there is no thrill in this kind of a question. So if they don't give you the bifurcation, the thrill will be lost. You're getting this one, students? If they don't give you the bifurcation, then the thrill will be lost. So bifurcation would be given. But supposingly I go with your query and your query say that, sir, supposingly they don't give it, then what I am going to do in this context? So students, in this regard, I am going to apply 8A. I am going to apply, students, 8A. Now please tell me, is a restaurant service and trading of the goods, is it a composite supply or a mixed supply? Will it be a composite supply or a mixed supply? Is it in ordinary course of business that I am going to do both restaurant service as well as supply of juices? Is it bundled that juices are provided naturally bundled, students? The juice you have to drink even though you don't like it. So we may say that these bundling is not in the normal course of business and we will say that it is a mixed supply. If I have to answer your query, Kavita, so I will say that it is a mixed supply. And if it is a mixed supply, then you tell me the final answer. What will be your answer? If it is a mixed supply, then the entire turnover. Indeed. Did you all now got this one? If that is the case, then where it will be bifurcated? Did you all got this one or not? Every one of you. It will be at the highest rate. And the highest rate, students, now you know, in that case would be at 5%, which is that restaurant service. So therefore, it would be classified as a restaurant service finally. It would be classified as a restaurant service finally. I hope that all of you are clear with this. So students, coming to this particular question, I think this question we have already discussed in that part. So, and so this, tell me, the composition scheme in the current financial year, that is 22-23, will be tested for under which section? Under section 10.1, 10.2 or 10.2A? They have closed a restaurant. I already told you, when you prepare the statement, you already have copied the format. When you prepare the statement, your statement has to be prepared for the current financial year. Statement has to be prepared for the current financial year. And if the statement has to be prepared for the current financial year, in that particular case, when I see the last year turnover eligibility, the last year turnover eligibility would be on the basis of 10.2A, which is the current year business, which is the service which I'm supplying, and hence my last year turnover eligibility would be up to rupees 50 lakhs. Whereas over here, in this case, they have told you that the last year turnover is 70 lakhs. Uttarakhand and all, don't get sentimental. Doesn't matter because you are in 10.2A and 10.2A, everything is covered. All the territories in India is covered for that 50 lakhs limit. And hence, the final conclusion is that since the last year turnover is 70 lakhs, which is exceeding the aggregate turnover of 50 lakhs, and hence he is not eligible for the composition. He is not eligible for the composition scheme. I hope that all of you are clear with this one. Now, with that, students, the last point number D. Mrs. Him Naresh, a registered dealer, is exclusively providing intrastate architect service in Uttarakhand. Again, the same. It has turnover of 40 lakhs. 40 lakhs, is it within the limit? Answer is yes. Because it is within the limit, he is eligible to avail what, students? Avail the composition scheme in the current financial year. Now let's look upon quickly to the other particular questions, students, which are there for your homework. Quickly, I'll just run through the other solution now so that we're done with this particular part now completely. Students, tomorrow we will start RCM or valuation, one of the two topic. RCM. RCM, I'm just thinking about it because RCM will require a bit of interlinking. Interlinking means with some other things. And if you are comfortable with the interlinking, students, then I might touch upon to the RCM tomorrow, or else I'll go to the valuation topic. It's up to you. Let's take question number 9. Question number 9, students. Mr. Prem is running a restaurant in New Delhi. Aveen, Aishwarya, RCM valuation. House is divided. Mr. Prem is running a restaurant in New Delhi in the financial year 21-22. It has an aggregate turnover of rupees 120 lakhs from the restaurant service. It has. So I think students are saying about valuation. I'll start with valuation and then might be RCM we will defer it family for the other particular part. In this context. So Mr. Prem is running a restaurant in New Delhi in the financial year 21-22. It has an so valuation is what you people want me to start tomorrow. I'll start with valuation then. Other students also opine. Why I'm saying so, students? Because RCM will require an interlinking with place of supply. It will require an interlinking with the time of supply topic. This context. So these are the topics which needs to be considered for appreciating the RCM. RCM on a standalone basis, in the way it is, like in chapter number 1 itself, RCM has been given charge of GST, and they have given you the okay, in this case RCM is there, in this case the RCM is there, this case the RCM is there. But in the examination, you don't get this kind of a question. When it is RCM, then in that case, like import of service, they will ask you, and in that import of service, there would be certain elements, some place of supply you have to consider, because where is the location of that particular supplier, where is the location of the receiver, and if supposingly a combination like the location of supplier is outside India, the location of receiver is also outside India, and the place of supply is in India, but the place of supply is in India. Now that combination, whether could it be covered under the RCM? So that kind of a bit, RCM is a topic which requires a bit of level of knowledge. So if you all are okay with it, I'll take the RCM or I'll start with valuation. Okay, valuation, and after the time of supply, thereafter maybe place of supply, and thereafter the small procedures and all, and then the three big topic, students, which is exemption, ITC, and so this is the order which I want to follow with your permission, obviously. You all are fine with it. Allocation, time of supply, place of supply, thereafter the procedural part, small topics, then the three big topics, ITC, exemption and RCM. This is a flow. Is that point clear to all of you? Now students, going with this particular proposition, Mr. Prem is running a restaurant in New Delhi. In financial year 21-22, it has an aggregate turnover of rupees 120 lakhs from the restaurant service. In the financial year 22-23, apart from restaurant service, he also wants to provide food delivery service to other small restaurants. He estimated a turnover of such service is up to rupees 5 lakhs. Delivery of food, that is goods in this context. Restaurant is a service, that is the case. But if you make the food and you deliver it in this context, so therefore food, then that becomes a case of goods. He estimated turnover of such service up to 5 lakhs. What is a marginal in this case? So in this situation, students, sorry, delivery of food. This is not a packed food. Okay, to other small restaurant. Students, this is not a packed food in this context. So this is maybe food delivery service could be like small restaurant. So he is making the food and then he is delivering. So maybe it could also be considered to be a service. Let me see what assumption that they have done it. Did they take that solution in the form of a packed food? Okay. So yeah. So this is also considered as a service, students. So it is not considered as a packed food, students, because if this would have been a packed food, students, be careful. So it is an outdoor catering. So I will say, students, this is a case of an outdoor catering. Had it been like if you see the previous question of juices being supplied, so obviously that juices would be the packed juices. Remember now, all these juices we get in the packed form, and they are doing intrastate. So that is a goods, huh? The juices which you are putting it. Yes, outdoor catering. Tulsi, that will be an outdoor catering. So obviously, students, this is a extra service that they are providing. So in that situation, we will say that this food delivery could be an outdoor catering and not a supply of goods. Now, please tell me, thus in 10.1 and 10.2, students, in 10.1 and 10.2, in this case, the second item is restaurant service. What is restaurant service? Indoor catering. Does 10, that second category, does it covers also outdoor catering? Answer is no. So outdoor catering is a extra service or additional service or marginal service. And for the marginal service, primarily, what is the limit? Limit already you are aware of it. 10% of what? 10% of the turnover of the preceding financial year, which is 120 lakhs. And this 120 lakhs will then be is how much? 12 lakhs. So 12 lakhs is the upper limit. And how much they have actually done? 5 lakhs. So is it within the limit? Yes. And because it is within the limit, therefore the composition scheme is available in this context. Is the composition scheme available, students, in this context? And the answer is yes. Now in this case, students, what statement you are going to prepare? Eligibility. So turnover of the previous year. What is the condition? Should not exceed more than 150 lakhs. In the remark side, that yes, the condition is satisfied. Then what is the second point that you're going to write in the statement? Marginal service. The second point in the statement would be marginal service. What is the threshold? You will put it upper limit and then remark that in the current year, the marginal service value is 5 lakhs. Therefore, it doesn't exceed the threshold limit and accordingly eligible for the composition. So I hope that these are the simple question, students, but since there were a lot of requests about just to discuss these questions on composition scheme, because many students are thinking about this topic to be quite tricky enough. So I thought just to quickly run through it and close it with all of you. Question number 10, students now. Mrs. Heeralal and Sons, registered in Karnataka, has opted to avail the benefit of composition scheme under 10.1 and 10.2. It has furnished the following details for the quarter ending. Students, be careful. Huh? He has opted to avail. So current year, they have given you, this is the current year over here. For the first time, this is now current year. He has opted, na students. Already he is registered, yes. And after registration, he is opting. So this cannot be the first year. Maybe this, he's an old registered person. But as far as the financial year, beginning from 1st April 2022, he has already opted for the composition scheme. He has already opted for the composition scheme. It has furnished the following details for the quarter ended 30th June 2022. Taxable turnover of the goods within the state, 15 lakhs. The taxable turnover of the goods within the state is 15 lakhs. Exempted turnover of the goods is how much? 17 lakhs. The exempted turnover of the goods is how much? 17 lakhs. And the total students is how much? 32. Now you tell me one thing, students. Who is he in this case? Is he a manufacturer? Okay, just let's have a look. Using the above information, calculate a tax payable by the firm for the quarter ended 30th of June in the following independent cases. So it's a computation of tax liability. In the computation of tax liability, students, aggregate turnover is required. Turnover of the state for the current financial year. If I say if he is a manufacturer, student, and then the tax liability. And then the tax liability. If he is a manufacturer, aggregate turnover 32 lakhs. In both the cases, it will be 32 lakhs because aggregate turnover will always include the exempted turnover also. Turnover of the state, if he is a manufacturer, now whether the turnover of the state, if he is a manufacturer, does it include both the exempted as well as the taxable turnover? Yes. So in this case, taxable supply plus the exempted supply both would be considered in this context. And now the rate, what is the rate? 1% for 0.5 and 0.5 each. 1% of 32 lakhs. What if he is a trader then, students? What if he is a trader? So if he is a trader, students, in this case, aggregate turnover will remain the same. What about this one? In this context, it will be 15 lakhs. Only the taxable supply would be considered. Exempted supply would not be considered. 1% of 15. Is that clear to all of you? This is the answer. Shall we move now further? Quickly. Perfect. This, students, is the reverse charge question. This is the RCM, students. So in any case, this was not in your homework also. This is the RCM question. So I'll take the next one. Question number 12. MN Limited has two registered place of business in the state of Haryana. Two registered, so they are deemed distinct person, students. So if both this one are registered places, so they are deemed distinct person. Its aggregate turnover during the financial year 21-22 was rupees 62 lakhs. Last previous financial year. It wishes to opt for composition levy under subsection 1 and subsection 2 of section 10 for one of the place of business of financial year and wants to continue. Is it possible? This already discussed, students. This is a theory, students, completely. Is it possible that aggregate would mean aggregate of all the place of business, all the supplies? That is what is the meaning of aggregate. So I think you can read this one. This is not a technical. This has already been discussed in the class. So I'm not keen in touching upon this. This has already been discussed. So you know the answer. That is what it is. Coming to question number 13. Ranveer Industries, registered in Himachal Pradesh, is engaged in interstate supply. Gone. That is the why I'm telling you, when you do composition scheme, you should be completely in your senses. See, otherwise they will trap you. The trap is already laid. Many students will not read this interstate supply as if they will not notice. They will read interstate supply, but they will not notice that it's a default case, prohibited supply. The aggregate turnover of Ranveer in the financial year is 70 lakhs. It has opted for composition levy primarily, and because now you think of Himachal Pradesh, you will say 75 lakhs. All that nonsense you're going to put up, and therefore you will conclude what? Yes, sir, the composition levy is available because the turnover is not more than 75 lakhs. Now, out of 10 students, 5 will make this mistake. 5 will make the mistake. Many of you are saying, sir, I am not in that 5. That we will see in the examination whether you are in that 5 or not. Okay. Therefore, we'll see in that particular point. Now, see, the final question, however, is this, students. The proper officer has levied penalty for wrongly availing the scheme of this thing in addition to tax payable by it. Examine the validity. Students, you will learn 73 and 74, wherein the show cause notices are being sent. And indeed, he has done a wrongly, he has availed the composition scheme. This is a case of a short levy. So, for a wrong availment of composition levy and for which he has paid less amount of tax liability, definitely the action of the officer in issuing the show cause notice and imposing the penalty is justified. Okay, students. Anyways, Mr. Yash, doing business in state of Kerala, commenced his business in the month of April and provides the following further information. His intrastate turnover for the first two quarters was as follows: April to June 20 lakhs, July to September 100 lakhs. In each of the quarters, exempt supply made by him was 25% of the total turnover for the set quarter. Total turnover for the set quarter. So now you tell me, students, in this case, these are all intrastate, students. For the first two quarters was as follows: April to June 20, July to September 100. In each of the quarters, exempt supply made by him was 25%. Be careful, students, in this case. Now I know where this question is heading now. If he is a manufacturer and if he is a trader, I knew that. If he is a manufacturer and if he is a trader. So I think that the same way the format already I prepared. If he is a manufacturer and if he is a trader, so how you are going to prepare the format? If he is a manufacturer and if he is a trader, how you are going to prepare the format? You know how you are going to prepare the format. The format is known to all of you now. No? Already the format is known. This is the format. If he is a manufacturer and if he is a trader. So as a registered person, if he is a manufacturer, then what is the aggregate turnover? What is the turnover of the state for the current financial year? In this case, and what is the tax liability? In this case, what you will do, that 25%, which is the exempted part, you will reduce it. So you will find that although the aggregate turnover in both the cases will be the same, but the turnover of the state, 25%, it will be less when it is a turnover, when he is a trader. And accordingly, the GST liability would be calculated. Is that point clear to all of you? Every one of you are aware of this one now. That exactly the point. That exactly the point. So therefore, if you less, this would be 75 lakhs. And this would be how much? 3/4. 4 on the 4, the 8, 16 lakhs. So therefore, for the respective quarter, students, for the respective quarter, April to June, 16 lakhs for the trader and 75 lakhs for the quarter July to September. I'm talking about the trader, students, for the trader. And for the manufacturer, this is what. But obviously, you have to show the presentation quarter wise. So first quarter, April to June, manufacturer, trader, like that. Then second quarter, July to September, manufacturer, trader. Manufacturer and trader. I hope that the format you have to show period wise. April to June, manufacturer, trader. July to September, manufacturer, trader. Format now, everyone is clear with this? All of you. Rajbir, cancel it. We have already done Rajbir question. This is a good question, students. Very good question. A unique question, a bit unique question, students. Question number 16. Just a second. This is a bit unique question. Question number 16, students. Mr. X, a trader, dealing exclusively in supply of goods and paying tax under the normal scheme, also eligible for composition scheme, submits the following details for coming financial year 23-24. You are required to determine which scheme will be more beneficial to him and whether Mr. X should opt for composition scheme. So you are supposed to decide, students, whether composition scheme or the normal scheme. Current year estimated data has been given to you. Obviously, students, if you opt for composition scheme, you will lose the ITC. So therefore, whatever the GST liability that you have to pay will have to be paid in cash through electronic cash ledger, because electronic credit ledger you don't have it at all. So how much is your cash outflow when you are in the composition scheme? As against if you opt for the normal scheme, then knowing that there is an ITC available to you, how much would be the cash outflow? How much would be the cash outflow? But this question is going further, one step further. What it is? I told you, students, that ITC, when you have to do, there is a lot of compliance. Compliance will have its cost also. So it is not only that in the normal scheme that you will reduce the ITC and see your cash outflow. You also have to see the compliance cost that will be involved in this case. This is what this question is. Other information is given below. Inherent nature of expenses 4,50,000 per year under both the schemes. So far as this is concerned, this is constant. So this will not change my decision in any of the case because it's constant for both. Books of accounts maintenance cost under the normal scheme 2 lakhs yearly, whereas if it is only composition 75,000. This will definitely will ultimately, when I will have my GST liability, from the GST liability I'll add these costs. Return filing expenses under normal is 48,000 and under composition is only 12,000 because only one return has to be filed, whereas in the normal scheme multiple returns will have to be filed. That is a point. This is a good question, students. So here the format would be like this, that if you use particulars, composition scheme, regular scheme. We can just discuss this particular part through this one only. Tax payable under the GST law. So just be careful, students. One point which is very important. If you see, outward supplies is inclusive of GST. Outward supply, students, is including of GST. So I need to know this 90 lakhs is inclusive of GST. So you have to do a reverse calculation. So this is 112. This is 112. Then how much is 100? This 100 is your value of output supply without the GST rate, GST at normal rate. So that amount comes to, students, that amount comes to how much? 80 lakhs 35,714. 80 lakhs 35,714. Now of 80 lakhs 35,714, if it is a composition scheme, it is only 1%. Wherever it is a regular scheme, it is 12%. Okay. Now ITC, students. ITC is not available here. ITC is available here. How much is ITC? 70 lakhs into 12%. ITC is 8,40,000. So the net amount of GST, students, in this case would be how much? 80,357. And here it would be 124,285. How you got this? 964,285 minus 8,40,000. Minus 8,40,000. I hope that all of you are clear with this one. Now you keep adding. This expenses 4,50, 4,50, you may skip it because it is constant for both. Books 75, 2 lakhs. Return filing 12 and 48 lakh. Cost of inward supply. Inward supply also doesn't change the decision. No? Inward supply is same for both. 70 lakhs, 70 lakhs. That also doesn't changes my decision making process, but still they have taken the totality approach. Fine, if you have to take the totality approach, do it. So you can see that the total cost is higher. So the total outflow is higher. Students, the total outflow is higher in the normal scheme as compared to the composition scheme. And because the total outflow is higher in the normal scheme as compared to the composition scheme, therefore I may opt for composition scheme. However, it is not simple. Business is not that simple. that just because of the 2 lakh, I might forego my normal scheme because you may aware that it's just a benefit of 2 lakhs. But my customer who are also registered supplier, they will shout that boss, you are supplying me only bill of supply under the composition scheme and I cannot take the ITC. So the chair of the Senmat, all that factor is also important in the real world. Only for this question, it's fine. Now, students, this is for GST registration part. This question unfortunately came over here. This will discuss in the GST registration topic, the same question. Will not touch upon over here. This came up over here, students, in this context. That is it, students. Congratulations, you are through with this photo. ITC is not part of the cost since we are taking ITC, sir. ITC. So, here in this particular context, okay, got your query. It's a very valid particular this thing. Got your point. Just check, students, once. Yes, Tulsi. Just check once, students. 70 lakhs. Is the subtotal, is it right? 86 lakhs. Can you just check? Make this as cost of inward supply under the normal scheme at 70 lakhs. And tell me the total of what? First, I want the total of this to this. Make this as 70 lakhs. Please give me the total of this. 124, 285.71, 4 lakh 50, 2 lakhs, 48,000. The last one to be added is 70 lakhs. ITC definitely is not a part of the cost. Just check it out whether it is this mistake or subtotal also needs. Quickly, sit with calci, don't sit without calci, student. 78,000. Triple two. Things changes, student. 78, triple 285. Student, that exactly the point. So the cost of inward supply in this regard would be, because I am getting the benefit of the credit, which I am reducing it. So therefore, this inward supply would be restricted to rupees 70 lakhs in this context. And therefore, because it is just 70 lakhs, accordingly, what is the final conclusion, students? Final conclusion is the normal scheme is more beneficial. Normal scheme is more beneficial. I think they are putting the decision making on the basis of cash flows. The cash outflows is the same. And what you are suggesting, Tulsi, is the valuation. So, based on the cash outflow, Tulsi, the decision making has been made. Are you getting this one? Based on the cash outflow that the decision making is made. See what they have done. I think this is correct technically because the decision making is based on the cash outflow. Did you got this one? The ITC credit you have taken over here, no? The valuation that you do is to just to check the value because that is for cascading effect, the rate of GST and all. That is for the valuation provision to eliminate the cascading effect, Tulsi. That is why that 12% that we apply is on that value, excluding what, students? That is on that value, excluding the GST part. This is because to calculate what is the value of supply on which the rate of GST would be applied. Whereas over here they are talking about on the cash outflows. So see that ITC credit has saved my cash outflow. ITC credit has saved my cash outflow, which is 8,40,000. So my net, this is my net cash outflow on GST. This is the net cash outflow on GST. Under the composition scheme, so that is a good particular query that you have raised, because this would have been, many students would have gone it wrong in that context. And in fact, when you put up that thing, I also got diverted on that valuation topic. But the solution that they have undertaken is not on the basis of the evaluation. The solution is on the basis of the cash outflow. That if I avail composition, what is my cash outflow? If I'm doing this thing, then what is my cash outflow? And therefore, in this particular context, my my cash outflow on GST is composition scheme without RTC 83,357. Normal scheme 124,285. What are the other cash outflow that has happened? 4,50,000 is the inherent expense, which is the same. Then books are same. Return, no, books we have seen. Return is different. And this part, the cash outflow to the supplier of the inward supplies, the cash outflow to the supplier is the same, na? 78,40,000 is what I have paid to the supplier under the normal scheme also, or whether it is a composition scheme. The only factor is that under the normal scheme, from this 78,40,000, what I have done? From this 78,40,000, what I have done? 8,40,000 I have taken the credit. 8,40,000 I have taken the credit from this 7840. So that have reduced my liability in that context. But what I have paid is 7840, whether it is a composition scheme or whether it is a normal scheme. So therefore, my cash outflow, the total cost involved, or may I say, this cost is actually primarily creating that confusion. The cash outflow, primarily in this particular context, is 8457 in this and 8621. I think this is correct. This is based on decision making is based on the cash outflows. I hope that every one of you are now clear with this one. All of you. So with that, students, we are through with this particular chapter completely comprehensively. And as I told you, students, the next class, students, we will bypass reverse charge for a time being, and we will start with the valuation topic, time of supply, place of supply, small miscellaneous provision, and thereafter ITC, exemption, and the reverse charge. This is how we will close this one. And then finally, it will leave us with few sessions of demand, recovery, penalty. That will not take much of time. They are the straight provision, the demand, recovery, advance flowing, and all those. Okay, see you then, students, in the next class. Take care. Tomorrow, same time.